When gold got up near 2000 in 2011, when the public was involved, when the Fed was doing QE and everybody was worried, and gold prices got up to 1900, silver got up to 50. Now gold is 50% higher than it was at that peak, and silver is 40% lower, right? So silver's got a ways to go, but once it really starts to break, I don't know where the key level is. Is it 35? Is it 40? You know, where it is. But I think when it goes through 50 next time, it's going to go through it, you know, like that proverbial hot knife through butter. And then I think 50 is going to become the support level for silver. I don't know how long it's going to kind of base build at around 50, low 50s. But then I think it could quickly double to 100.
For years, silver has been known as the poor man's gold. But could it be on the verge of a massive breakout? In 2011, when the Federal Reserve ramped up quantitative easing and investors flooded into precious metals, gold soared to nearly $2,000 an ounce, while silver skyrocketed to $50. Fast forward to today, and gold has smashed past its previous highs, yet silver remains far below its peak. So, why the lag? And more importantly, could silver soon catch up, break past $50, and never look back? Renowned economist and market analyst Peter Schiff believes that silver is not just undervalued, it's primed for a major move. According to Schiff, once silver crosses the critical $50 threshold, it won't just inch higher. It could blast through like a hot knife through butter, potentially doubling to $100 in a short period, especially if gold continues its rally toward $3,200 or beyond. Schiff's analysis doesn't stop there. He warns of a looming crisis for the US dollar, exacerbated by escalating national debt and persistent inflation. He suggests that the dollar's status as the world's reserve currency is under threat, leading central banks worldwide to increase their gold reserves as a hedge against potential devaluation. This shift could further propel gold prices, with Schiff forecasting that gold could reach unprecedented levels, possibly increasing 20 to 50 times its current value. We will present clips from Schiff's recent interview with Commodity Culture. As we do, please share and like this video, subscribe to the channel, and turn on the notifications bell for more videos like this. We appreciate the support and hope you enjoy the video.
I mean, they didn't care about 2000, so I don't know why 3000 would be much different. So I don't know if it's a number that's going to be the catalyst for investors to wake up, not only to the opportunities in gold in the bull market. You know, gold is now up tenfold since the low in 99, 2000, 2001. It's outperforming the S&P. You know, they were talking about the S&P hit a new all-time record high the other day, but compared to where it was January 1st of 2021, the S&P was down about 57% if you price it in gold. So, you know, for all the, you know, the hype in the stock market, it hasn't even beaten, you know, a bar gold, right? And so it shows you that really what we're looking at is inflation, not legitimate increase in value. But I think at some point, investors are going to look at the bull market they've been missing. In fact, all last year, investors were selling their gold, and that's carried into this year. Americans have been net sellers of gold. They've been liquidating gold ETFs. They've been selling their physical gold. I know that just from my own gold company, where, you know, we've been getting a lot of people calling us up to sell their gold. There's been net outflows out of all the gold stock ETFs over the last year and so far this year. So Americans have been completely missing from this bull market. It's mainly been led by emerging market central banks, who have been the big buyers. And they're not anywhere near done buying. They're really just getting started. They have a lot of gold to buy. So when the public starts competing with the central banks, then yeah, I think you're going to see an acceleration of the uptrend. And I think then it'll spill over into silver, because the central banks haven't been buying silver because they don't really have a place to store it. So they buy gold. But the public will buy silver. So I think silver has even more short-term potential than gold. And I think money's going to come into the mining stocks. I think Wall Street is going to take a look at stocks that are trading. I mean, the big stocks are trading at very low multiples. low double digits, 11, 12 times earnings. And that's, trailing earnings. Their actual earnings for 2025 will probably be so much higher than what analysts estimate that most of these big stocks are probably sporting PEs of like 7 or 8. Compare that to, look, Walmart, which is down 6% today, is trading at 40 times earnings. Why pay 40 times earnings for Walmart? How fast could they grow their earnings? They don't have anywhere near the earnings growth that you're going to see in these gold mining stocks that are trading for, a fraction of the valuation of a Walmart.
Yeah, I want to talk about the gap in valuation between gold and gold miners. It's something that comes up often on this show. It was recently at the Vancouver Resource Investment Conference. It was one of the biggest topics at that conference as well. Why do you think this valuation gap exists? Why hasn't the market caught on?
Well, I think it's mainly a function of the expectations of future earnings. I think the analysts that cover these stocks and stock market investors in general, they have no idea why gold is going up, and they assume that it's just a fluke and that gold prices are going to come back down. And so they're not willing to put a lot of value on gold companies' earnings because they don't think the earnings are sustainable. Meanwhile, they look at the increasing cost of mining and they assume that that's going to continue. So they think it's going to continue to get more and more expensive to mine gold, but they expect the price of gold to come down. So it really is going to take a change of that perspective. Now, of course, at some point, gold prices will go up so much that it doesn't even matter if they come down. In fact, I think we're already at that point. I think even if gold went back to $2,000 an ounce, I think these mining stocks are still a good deal. But gold's not going back down to 2,000. It's more likely to go to 4,000 than 2,000. And so analysts have to start, pricing this stuff in and realizing that there's tremendous potential. Now, if they don't realize it, the companies themselves will. These gold companies are increasing their share buybacks. And so if Wall Street won't buy the stocks, the companies will buy the stocks. And they have massive earnings to do it with. And a lot of these stocks have got great balance sheets now. They don't have a lot of debt. They got a lot of cash. They're earning tremendous amounts of cash. There are companies that are able to mine golds for under $1,000 an ounce. Most of them, the cost is maybe $1,200 to $1,400 an ounce. But when you're talking about $3,000 gold, there's a lot of margin in there.
There's a lot of room to run. What are your thoughts on silver at present?
Again, it's because the public has been missing, and the public is usually the buyers of silver, not the central banks. They say it's the poor man's gold. When gold got up near 2,000 in 2011, when the public was involved, when the Fed was doing QE and everybody was worried, and gold prices got up to 1,900, silver got up to 50. Now gold is 50% higher than it was at that peak, and silver is 40% lower, right? So silver's got a ways to go, but once it really starts to break, I don't know where the key level is. Is it 35? Is it 40? Where it is. But I think when it goes through 50 next time, it's going to go through it, like that proverbial hot knife through butter. And then I think 50 is going to become the support level for silver. I don't know how long it's going to kind of base build at around 50, low 50s. But then I think it could quickly double to 100, especially if gold keeps rising. So if gold goes to 3,200, 3,300, I think in that environment, silver could go to 100, and it would still not be expensive relative to gold. It'd still be pretty cheap.
Schiff argues that inflation in the U.S. has become sticky because the Federal Reserve's policies have failed to bring it under control. He believes that while the Fed has aggressively raised interest rates, it has not done enough to reverse the inflationary damage caused by years of monetary expansion. Schiff points out that core inflation, as measured by the Personal Consumption Expenditures (PCE) price index, remains significantly above the Fed's 2% target, indicating that inflation is not just a temporary phenomenon, but an embedded issue within the economy. Another reason Schiff sees inflation as persistent is the structural imbalances in the economy. He has repeatedly warned that excessive government spending, soaring national debt, and continued money printing have created a scenario where inflation cannot easily subside. Unlike previous inflationary periods where interest rate hikes could cool down demand and bring prices under control, the current environment is different because government deficits remain large, and there is no sign of fiscal restraint. Schiff has long maintained that the only way to truly tackle inflation would be for the Fed to take much more drastic action, such as significantly shrinking its balance sheet and allowing interest rates to rise even further. However, he argues that such moves would likely trigger a severe recession, something the Fed and the government are unwilling to risk. As a result, inflation remains sticky, meaning that it may fluctuate but will not return to pre-pandemic levels anytime soon. Instead, he predicts that inflation will continue to erode purchasing power over time, forcing investors and consumers to adapt to a prolonged period of rising prices. Let's get back to the video.
But, we've had 4 consecutive months of accelerating CPI. It went from 2 to 3, from 0.2 to 0.3, 0.3 to 0.4, 0.4 to 0.5. And so now you're talking about 6% annualized inflation, 6.2 if you take the last month. If you take the last 3 months, it's 5% inflation, 4.9. So we're certainly heading in the other direction from 2. And if you look at the 25% plus surge in commodity prices that has taken place over the past year, and figure that a lot of those price increases haven't even made their way into the CPI yet. There's a lot of price hikes coming in the future, because the numbers benefited because we had a big drop in commodity prices that helped bring down the CPI in 2024. But now we have a big surge in commodity prices in 2024 that's going to be pushing up the CPI in 2025. So we're going to get a big surprise. A lot of people are going to be surprised, and the Fed is completely asleep at the switch, or deliberately ignoring what's happening. They claim that they have restrictive monetary policy. They don't. Policy is still stimulative. They never actually got into restrictive territory. They aborted the hiking the minute banks started to fail, but they hadn't put that inflation genie back in the bottle. It was going to take a lot more work to do that. Remember, in 1980, interest rates got to 20%. And, inflation, CPI never got any higher than 13%. Of course, it was a much more honest CPI back then. But even if you say, okay, based on our dishonest CPI, yields were 9%, how did we stop that inflation with a 5% Fed funds rate? We didn't get anywhere close to 9, let alone above it. So the Fed aborted too soon, declared victory, too early. We did get a temporary reduction in the rate of inflation, right? It went from 9% to 3%, but now it's headed back up again. And if the Fed keeps rates where they are, at some point, not too far away, we'll be back at 9% again or higher. The Fed needs much higher interest rates. The problem is we're too broke to afford it. In 1980, we could afford 20%. we couldn't even afford 5%, right? That the banks started to fall apart. So the Fed had to back off.
Silver has long been regarded as the poor man's gold, yet its recent price movement suggests that it may be on the verge of a major breakout. As we've explored in this video, while gold has reached new all-time highs, silver remains significantly below its previous peak of $50. But as Peter Schiff has argued, this gap may not last much longer. According to his analysis, once silver breaks through the crucial $50 threshold, it could move swiftly, doubling to $100 in a short period, especially if gold continues its rally toward $3,200 or beyond. However, Schiff's insights go beyond just silver and gold. He warns that the broader U.S. economy is on shaky ground, weighed down by excessive government spending, soaring national debt, and persistent inflation. Despite the Federal Reserve's aggressive rate hikes, inflation has remained stubbornly high, proving far more entrenched than many policymakers expected. Schiff believes that the Fed has already lost the fight against inflation, and that its current approach is merely postponing an inevitable reckoning. The longer inflation remains elevated, the greater the risk that the US dollar's status as the world's reserve currency could be called into question. Central banks around the world are already preparing for this possibility by increasing their gold reserves, a move that could send gold prices soaring even further. Schiff has even suggested that gold could multiply in value by 20 to 50 times if confidence in the dollar continues to erode. If that happens, silver, which has historically followed gold's trajectory, could see an explosive price movement, making it one of the most undervalued assets in today's financial markets. So, what does this all mean for investors? If Schiff's predictions hold true, we could be entering a new era for precious metals. Silver, long overlooked and undervalued, may be gearing up for a historic price surge. Inflation will likely remain a persistent challenge, eroding the purchasing power of fiat currencies and driving more investors toward tangible assets like gold and silver. And with mounting economic uncertainty, the case for diversifying into precious metals has never been stronger. If you found this analysis valuable, don't forget to like this video, subscribe to the channel, and turn on the notification bell so you never miss an update. Let us know in the comments. Do you think silver will break past $50 and keep climbing? How do you see the future of the US economy playing out? We'd love to hear your thoughts. Thanks for watching, and we'll see you in the next video.